Welcome to Symax Fintech Weekly Market Insight. First of all, we start off with our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone. Hopefully it is for you though. And as some companies provide leverage, just be careful because you can lose substantially more than that initial investment. All the views, opinions, everything that's included in our educational content is purely for educational purposes, and we are not trying to encourage you to trade or invest. That must be your decision. And before you make that decision, you should consider the risks involved, your financial situation, definitely your level of experience and your risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. Any doubts whatsoever, seek professional, independent financial advice before you risk your capital. You know, practice, and even practicing and being successful on a demo does not always transfer into live trading. In fact, rarely. Okay, so there was quite a lot go on in the first full week of 2023. There was a few central bankers speaking. Obviously, Powell's was the most important one for most, and he continues to insist that the Fed's priority is to regain control of inflation. So consumer credit is increasing as more households are living off of their credit cards. CPI headline came in at 6.5% year on year, which was expected, but month on month it was down 0.1%, which excited investors, and the core at 5.7%, still a long way from 2% though. Jobless claims remain steady at 205k, and that's something just to keep an eye on. You know, if that starts to creep up, then that will start to tell you the economy is weakening. And Michigan consumer sentiment was red hot, 64.6, very high. Okay, for the EU, unemployment remains at record low, 6.5%. Industrial production was better than expected at 1%, so up 1%. Now, German industrial production was up 0.2% month on month. So again, you know, all these things are that little bit more promising for the start of 2023. In the UK, retail sales up 6.5% year on year. GDP holding above 0.1%, so that recession's not here yet. Industrial production is still dropping though, down almost 6% year on year. Now, China, CPI 1.8%. You know, what wouldn't central banks give to have inflation around 1.8%? However, exports dropped considerably by 9.9% in December, which, you know, it does make you to a degree understand why they have reopened and just sort of just removing their COVID zero policy. Unfortunately, that is leading to a lot more serious cases there though. Japan, household spending still dropping, down 1.2% year on year. CPI at 4% with core 2.7%. Now, Australia CPI spiked to 7.3%, quite a bit above expectations there for year on year. And retail sales higher at 1.4% month on month. Now, if we look at what happened in the markets last week, WTI on Friday hit $80 again. Gold traded 19.25. Stocks climbed all week and the dollar continued to weaken. Again, all impacting that. I'll cover that all a bit more when we get into the macro outlook. Now, key data this week, there is a lot of data this week. Plus, you're going to start to see Q4 earnings reports coming through as well. I mean, Friday, some of the banks reported, but there's a lot more to come. So just be prepared for that, especially if you're trading stocks. So in the US, it's a holiday, Martin Luther King's birthday. Then we've got PPI, retail sales, capacity utilization, which I really like because that does give you an insight into, if industry is really steaming ahead. Just look for that 80 to 84% level, which, is considered very sort of positive for the economy. Industrial production, business inventories, we've got housing data, and we've got the Philly Fed as well. So quite a lot to come out in the US. In the UK, we've got the average earnings and unemployment. Well, unemployment depends which way you look at it. CPI, retail sales, and just keep an eye on those house prices because they're expected to dip more. In the EU, we've got the ZEW, CPI. Germany, pretty much the same CPI, ZEW, but also with PPI. Again, so we're starting to see some of these inflationary pieces of data coming through, which obviously we're waiting for, which can be useful and give us some insight. Now, China GDP, industrial production, retail sales, and towards the end of the week, we have that rate decision. Australia, employment data. Japan, we've got a rate decision from them as well, plus industrial production and CPI. And Canada, CPI, and retail sales. So a lot going on this coming week. And of course, you're going to expect to see the markets react to it. You're going to expect to see currencies reacting as well. So, I mean, everything, what a difference though. I mean, the start of this year is much more positive so far. So when we sort of look at the macro outlook for 2023 to start with, inflation. So inflation, yes, it's slowly coming down, but it's still nowhere near the central bank's 2% target in the Western world. So rate hikes still potentially there. It's just that they're going to be smaller, and then they will stop. That doesn't mean that rates will come down though. And just keep an eye on US inflation because with this weaker dollar, they're going to be importing inflation. They've benefited over the last 2-3 years of having a really strong dollar, but now that's weakening quite a bit. Sort of trading, dollar index was trading sort of 102 when it was up at 111, so that is quite a big move down. And that is means that they're going to be importing inflation. For some economists, stagflation is more likely than a recession for the moment. And, some of those recession fears are beginning to moderate. Obviously, that's a great thing. It's a good thing, but we've still got a long way to go yet. And, it's still going to happen in some countries. I mean, in the UK, where I am, for example, I mean, we've got to expect a recession. It's just, as things stand at the moment, it could be shallower and shorter than expected, when we looked at these things last year. And that could be the same for most countries. And the US potentially may just be borderline whether they go back into recession. I mean, last year was only a technical one, which was crazy, really, considering the strength of their economy. However, something I'm concerned about is China unlocking, and I mentioned this last week. For me, there's good and bad. Again, they can both be inflationary, so it depends how this goes because demand, the pressures are going to increase there on inflation. And you're seeing, that already in oil prices back up to $80, where the expectations are that demand's going to grow again. And then, there could be this lack of workers in China due to COVID, and that could disrupt the supply chains again. So, although we are hoping inflation is on its way back down to something sensible, It's not there yet, and you know, there's going to be some more challenges ahead, I would say. When we look at Russia, Ukraine's still fighting well despite the amount of Russian missile strikes that they're doing, you know, just where they're aiming at sort of the water and power within Ukraine. It's, you know, it's great the way that they've resisted and, you know, they're regaining ground. And the US, UK are providing some of their advanced weaponry and support, which is good to see as well. Now, energy prices have been rising with that expectation to fresh demand from China. European weather is going to cool this week as well, so don't be surprised if gas prices start to move up a little more. Whether it's just this week, we'll have to wait and see. Now, for me, it's not so much a biggest surprise, but biggest irritation to a degree, I would say, is food prices. They continue to stay high despite the fact that many costs are back to pre-war levels. Okay, power costs are higher, workers' wages are a bit higher, but you know, when you look at some of these things, they've either gone up 20, 25%, or you've got this shrinkflation where you're getting less for the same money. And I just believe that a lot of these food companies and supermarkets are just profiteering at the moment. And you know, it is helping to keep inflation that little bit higher than perhaps it should be. Also, as I mentioned, that weaker US dollar is, you know, going to impact inflation in the US, but that's a benefit for other countries though, because a weaker dollar, you know, most commodities, for example, are priced in dollars. So it's going to take less of your local currency to buy those commodities. But again, you know, that can push prices a bit higher because of the weaker dollar. So, you know, everything's got sort of negatives and positives at the moment as we go through. And we've still got that lack of workers. But, you know, employment is so high in most countries. So, you know, where do we see these extra workers coming from? You know, it is a big challenge, for sure.